What's up? I like hit my mic as I was swiveling it over. Were you here for the live stream yesterday? Actually, I'm gonna grab some more tea real quick. Whoever's here, say hello so I know you're here. Subi, that doesn't look very comfortable. Lay down there like that for a girl. Why don't you go lay up on the couch or something? Here. No. You didn't look very comfortable. Nobody? Anybody? Bueller? 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 I'm going to give it about till 9:20, and then I'm actually just going to go ahead and go through my strategy in a nutshell. I'm going to break it down. Not in a nutshell. I'm going to try to explain it in as much detail as possible. From start to finish. Actually, pull up. Okie doke. All right. What we're going to do is I'm just going to go through the strategy. So from start to finish. So first thing that I look for is right here, the scanner. So what I'm doing is I have the scanner up on my other screen, and I'm basically waiting for it to alert us. So if you go back and watch any of my YouTube videos, I run this on pretty much all my videos, and everything you see me take, you will most likely see on the scanner as I have it pulled up. And the reason behind that is because it's making an intense move, which is exactly what you see here from DXC. So let me pull this up. So DXC first alerted back under 21. So we'll just use this line here, which was a line right off the daily, which we'll get to in a little bit. But so DXC alerted on the scanner under 21 as it was making this move here. So that's step number one, alert on the scanner to pull it up. And basically anything that alerts over 20 is what I'm interested in, unless it's a higher price stock, and I'm talking higher price like $50 plus. Then sometimes it won't ever get up to 20 because the intensity of the move needs to be a little bit higher, and it's just really hard for higher price moves to make higher percentage moves, but they do happen. But for the most part, the higher price stocks are not going to get up over like 15-ish. So what you can do is actually have a whole separate scan where if I shift click, I can have a second scanner, and what I can do is I can go to the menu and I can put the alert when it exceeds 15. I can put the min price at say 40, and then that way this will only show stocks that are over $40, and it'll alert me when it hits 15. So that way I can have two scans, and then this one you could set for min price of 1 and then a max price of 40, and it'll still be set to 20. So this scanner will be anything from $1 to $40. This will be from 40 to whatever. But the idea behind that is you can filter out the ones that are a little bit on the cheaper side and ones that are on the more expensive side. So that way these don't get mixed in with these. So something that might be down at like 10, which could be a higher price stock that could be alerting, because it's making a move like this, it's just a more expensive stock. You might miss that because it might be in the middle of all the other stocks that are alerting a little bit higher. So that is a possibility with the TMISW package. And I actually believe you can do that with the Platinum as well. I'd have to double check on that. But I know you can have 3 scans with TMISW. I think maybe it's only 2 with Platinum, but I'm not. Don't hold me to that. I'm not sure. I'd have to check. The Ultra Scan, though, however, I do know for a fact that it is just a team thing. So, and actually, if you are interested in the team, Brian actually just added a link to the team package down. Like if you click on my link, it'll show a team package on there instead of just the Elite and the Platinum. But anyways, this is step number 1, getting the alert off the scanner. That's step number 1. Step number 2, when I pull the chart up, I'm looking for 3 things. I'm looking for an extension away from previous resistance, right? I love to scroll out, and I love to look at the bigger picture, and I love to see how extended this looks, right? Number 2, well, the first of the 3 was the scanner, right? It has to be alerted on the scanner. The second thing is when I pull it up, I want to see it extended. And the third thing is I want it to be fast. I want the move to be as fast as possible. I want it to be moving, the faster the better, because the faster the move is, the weaker the trend is. It's that simple. If this is just kind of grinding up, like kind of like over here, this could really kind of do whatever it wants. But when you have a move that tries to go straight up, most likely before it continues doing whatever it wants to do the rest of the day, it's going to come straight back down. Not always, more than, this was about 50% of the move. If we want to draw the fib, which we'll get into here in a little bit, but just out of curiosity while I'm talking about it, and it's pretty darn close, right to the 50. So that's my three step criteria: off the scanner, extension, fast. That's the 3 things that I like to look for. So once we have the stock up, we determined that it looks good. If we feel that we're a little bit early, we pulled it up and we feel like, okay, it's not really that extended. Let me pull up the daily and see, like say this alerted at 2060 all the way down here. So we see it making this move and we're like, it's getting there, but it's not quite there. Well, this is just an added step, but you could pull up the daily and you can start looking for key levels. So 20, as you can see, look at it, hit this top here, hit this top here, and actually hit it. Oh, that's not the same line. So it's actually the top line. So it previously was used as resistance right here, this $21 area. So if we go back to that move, we'll see that if we wanted to wait for that move to start happening, actually let me hit back one more time. I don't know why it's, for some reason, let me go back now. But as it's making this move, if it alerted here in this area, and we saw that there was a line here, you could almost wait. And as you can see, look, this thing went right through 21, pretty much right to that line at 21.14 is where we drew it. It could have been at 21.10 on the daily. We didn't actually check, but it tried to pull back right there, right? It came all the way back down through 21 to 20.94, and then it continued. But that's what I'm saying. If we feel like it's not extended enough, you don't have to enter just because the scanner said it's getting ready to alert. But what you can do is be like, okay, well, I'm early. Let's go see if there's any cool spots on the daily that this might go to. And that's actually what I did. And I actually started this position at 20.98. And I actually hit it as it was coming back down through. I let it make a top, saw it failed 21. I actually thought I hit it at 21, but I missed it by just a little bit. It came back through. I got 20.98. As you can tell, I was wrong because pretty much right after I hit it, it did go to 20.94, but then it ultimately decided to keep running. But that's besides the point. But how do we enter the position, right? So we know that we want to enter the stock. We pulled the stock. It alerted on the scanner. We pulled it up. It's now extended, right? We see it's nice and extended. We even found a level on the daily that we liked, and it's moving fast, right? Look at the volume. It's moving nice and fast. So how do we actually enter the stock? How do we determine our share size? How do we determine where our stop loss is going to be? How do we determine all that? Well, over here, the scale of the stock. And I made a big deal out of this yesterday. My charts, this is not what my main chart looks like. So on my montage, you're going to see I have 5 cents, 10 cents, 25 cents, 50 cents, $1, and $2. My 6 orange buttons. These are my entry parameters. What does 5 cent, 10 cent, 25 cent, 50 cent, $1, and $2 have? Like what are those? What are those in relation to? The scale over here on the side of my charts. So on every chart, I have it's exactly the same. It's going to look. Let's see if it'll let me do it now. Maybe there we go. So I have 2 days worth of data every time I pull up a chart. So my chart's going to look like this. Oops. Shit. Sorry, hold on. So I'm going to have the day prior and so far today. So let's see if I can get just this candle. There we go. So my chart's going to look like this, but it's going to be in like a much smaller box. So it's going to be a little bit, let's see, 10. Pretty sure that is the 20. So I was probably in the 25 cent range, where right now it's showing 5 cents, but that's because this chart is so big. It spreads everything out. So when I entered the stock over here, there was the 25 cent range. So it was going from 20.75 to 21, 21.25, 21.50, 21.75, etc. So all I have to do is, after I realize that I want to play this stock, just come over here, hit my 25 cent button. This is an old montage, by the way, so that's why the values are different than what I'm currently using. But that's it. This button is predetermined. Now, how do we predetermine that? And I'm going to show you what I'm currently using. So $65 is my max loss right now. So you're going to take that $65 and you're going to divide it by the scale of the chart. So the scale of the chart at that time was 25 cents. That's going to be your total share size. However, what I found through a ton of back testing, just going through statistics that I've had through my testing, is that if you take this number and you times it by 60%, that'll give you a more realistic share size that you should be splitting up so that you can stay within reason to that max loss of 65 that we started with. Because if you use 260 and you start to scale into a position, you're going to get to that 65 way too quick. But if what I came up with was if you multiply it by 60%, it's gonna come out almost perfect, almost every time. And again, that was a ton of hours put into figuring that out. So you're welcome. So anyways, 156. That's the total share size that we want to end up with. Now, the old system using 112, you would take this, you would divide it by 2, and then you would divide it by 2 again. And there's your starter. So you would go 39 on your first entry, 39 on your second entry, and then 78 on your third entry. So let me move this aside real quick and show you. I'm actually just going to show you the move itself. So the problem with 112, say we get our first entry where we did 2098, and then say like about halfway up here we felt like it was going to stop, like say it started hitting 2150 and it rejected. So on the same candle we got a second entry, and then it pops up here and we wait and we hit our 2 over here on the way back down. Well, it comes back down, but our average is still, somewhere down in here. It looks like it probably would have bounced pretty close to what our average would be. And then it goes back high of day and starts to rip. Well, in this scenario with 112, you're always going to be in trouble when you're early. With 112, no matter what, if you're early, you're early. And your risk management is to stop out near that high of day. Now, granted, when you do stop out of high of day, it should be near that $65 mark, because that's exactly what that calculation was designed to do, was to allow you to get into a stock based on the scale of the ticker and get your position in there, right? So once it goes high of day, it's not always going to be exactly $65, but it's going to be pretty darn close to it. It was every single time I did it. However, that sucks, right? Because look, if you could have just withstood one more little move, you could have made some profit. And this was happening to me a lot. I would be early. I'd end up having to stop out, and then it would end up working out. So 112, stop out, basically a top tick. It went a little bit further, and then it would dump off. So what am I doing now? What I'm doing now is, instead of dividing this by 4, which is 112, right? 1 plus 1 plus 2 is 4, right? Instead of having the 4 variable, I'm now using 20. So I have 156. I divide it by 20. Oops. So my entry size would now be 8 shares, right? Instead of 39, it's now 8, which is about 1/5 of 39. So now you can use this however you want. Now remember 112 is only 3 entries, but it's a variable of 4. 20 is a variable. How you get to 20 is completely up to you. But what I did in this trade is 2098, 2130, 2160, 2161, 2185, and 2211. So let's get rid of these extra lines that were off the daily real quick. And these are my entries. And this is just previous resistance below. So these are my entries. 1, 2, 3, 4, 5, 6 entries. But what you don't see is this was one variable, 2 variables, 2 variables, so now we're at 6, 4 variable, so now we're at 10, and then another 4 variable. So we're at 14. So basically 1, 1, 2, 2, 4, 4. So now we're up to 14 of our 20. So technically we still had 6 variable left. If this wanted to continue up to 2250, we could have still hit this one more time, or we could have split it if we really wanted to, 3-3. But the idea is you want to try to use more share size each time, if possible, because it'll keep your average up, right? The whole goal of this strategy is to always keep your average above the 50% line. So real quick, after this one candle, the 50% line is right about there. So you want your average above that. Our average was above that. On the second move where we got our entry, now the midway point is probably like here. We want our average above this. Our average is probably right around here. So we're good. Move is now here. Well, now the 50% line is probably right around our first entry here, but our average is up here, right? We're still good. Get our fourth entry. The high is now there. So now the midway point is probably, actually, no, there's an easier way to do this. So now it's here. So now the 50% line is here, but our average is probably right here, right? 1, 1, 2, 2. So we hammered this. So now our average is probably right around this 2147 line, or maybe a little bit lower. But the 50% line is all the way down here at 21. So we're good. It continues a little bit higher. We get another entry here for 4. So now move it up. Move this up. That's about right. So now the 50% line is up at 2110. But now we hit it for 4. Now our average is probably right up around here. And then it keeps going again. So now the 50% line is up here at 2121. And I know for a fact that our average was 2175. So basically, we'll just take this line off. It was basically right where this line is, this 23.6 line. So our average is here. The 50 is all the way down here. So we successfully kept our average well above the 50% line. So in our head, we're good, right? That's the whole goal of the strategy, to stay in the trade as long as we can, as long as the move is continuous and fast and it's extending, right? I mean, this is pretty picture perfect. Look at this extension. It was fast and we got some pretty good size into it. This ended up being our biggest winner doing this strategy yet because we had the most size into it. Unfortunately, when this thing came down, it pretty much bounced right off our average. As you can tell, this came to 2170. Our average was at 75. So as it was coming back up right here, we actually took half of our position off just in case this wanted to try to continue, right? We wanted to take some risk off. So we took half of our position off at break even, and so we only got half of our full position on the way back down. But we still had a good average, right? So we got to ride this down a little bit. So that's the whole goal of scaling in, the 20 variable instead of 4 variable. But it's the same share size, the same risk. Everything's the same. You're just breaking it up a little bit more. It allows you to stay in the move longer. It allows you to win more often. It allows you to lose less often. And it allows you to keep a better average. That's really what it comes down to. And then again, when it comes to taking profits, that's really what you feel comfortable with. Do you like using the fibs? Do you like waiting for 50% of the move? Do you want to, scalp as soon as you get the opportunity? There's so many different ways to take profit. That's really up to you. I personally do my best to take off. If it's a really quick flush like this was, I try to take off as much as I can if it's into the green. But unfortunately, it wasn't really into the green for this one. Like I said, it was right to our average. So since it was a big flush right to it, I took at least half off, knowing there was probably going to be some kind of a bounce. Granted, there really wasn't any bounce. I mean, it did go back up to 86, but then it ultimately ended up failing, and we ended up scaling out on the way down. So this is the strategy in a nutshell. I don't really know a better way to explain it, but I'm hoping that there could be some questions, because it would be a lot it'd be a lot easier for me to just answer questions on something that I may have missed. But so far, it's worked very well. I'm 100% over the course of 24 trades since I started on the 25th of August. So obviously, there's other factors. Just being able to feel tops, that's kind of an art form. It's something that I feel like I've picked up, over the years, over the year I've been doing this. So that goes into it as well. There's no system to the entries. But if there's a way that I can explain it, is you're looking for the jiggle effect. So basically it's moving fast. You can just see the ask going up and up and up and up. Well, basically you're looking for that ask to start hitting a wall or a ceiling. It starts bouncing off of it. Instead of just going higher and higher and higher, now it's starting to struggle to get higher and higher. And then you start seeing some bids get hit. And then you see the ask go back up to that level, and then some bids get hit. And that's usually what we call the jiggle. And that's usually a good time to enter after it made that fast move. Now, granted, sometimes you're going to feel that jiggle like we did here, and then it's going to continue. So that's why, what we're doing as far as scaling into a position can be necessary, because sometimes you're not going to find the top. But as you can see, this one actually went quite a bit. But then you have trades like SPG, which this one was a lot less of a move, but it made an extension through here, made a nice fast move. We ended up scaling into this one twice. We hit it twice. It tried to go higher, did not, and then we scaled out on the way back down. Actually, I think this was a single exit somewhere like right in here. But it was about 50% of the move, right? If we draw the fibs based off of that previous resistance, yeah, it was actually a little bit more than 50%. So that's the whole goal, is if you're going to scale into the position, try to keep your average above that 50% line. Stocks love to come back down to that 50% line. So if you can keep your average above it, the higher the better, obviously, then you have a very good opportunity to make some money. That's the goal. There's obviously going to be times where it consolidates above that and then goes higher, and that's when you get your losers. And a lot of people love to say, well, when that happens, that you're with this strategy scaling in, your losses are going to wipe out so many of your wins, and that's not always true, right? We got two entries, like one was here, so they're real close to high of day, and if this would have consolidated and went sideways and went higher, we only had 2 of our 20 invested into this trade and it went high of day. That's going to be a pretty small loss in comparison. So it's not going to be that big of a deal. Now, if you were to basically say I'm either going to win or lose every single time, that's a whole different story, because now you're going to lose $65 every time you lose. And if you're fighting stocks that are no longer moving fast, then that's a whole nother problem. But the goal is to only trade fast, right? The faster the move, the weaker the trend. So that's what we're looking for. We're looking for fast. If you start playing grinders, let me see if I can find an example. So AMD is a decent example, but just to the downside. But look how this thing grinded. Look at this 9 EMA right here. See how it's stuck real close to it? That's what you would say is a linear move, and that's why it had no problem just continuing over and over again. But if you look at something like SPG, look at the 9 here. It was grinding, and then boom, it extended away from it. That's what we're looking for, and on some volume, which is even better. More volume, what that usually means is a lot of buyers stepped in, but then a lot of sellers also stepped in as well. Obviously, right? Because in order for a transaction to go through on the stock market, you need a buyer and a seller. So the more volume there, it means, okay, we had some FOMO, but then we were also met with a lot of sellers that are saying, okay, that's high enough, basically. And that's it. That's the strategy. It really is simple. It's meant to be simple. What we're doing is capitalizing on people's emotions. That's really what it comes down to, is make sure that you're getting in when the 90% are probably thinking the opposite, right? That's really the goal, is to know what the 90% is doing and do the opposite of them. because obviously the 90% are the ones not making money. So, do you have any questions based off of that? If not, I can think of one more thing that I would like to go over. But other than that, I mean, that's it. Ask away, man. I'm just going to update my shopping list while I wait for your question. You know, I keep hearing this crap about commissions. So right now, and you guys know I'm completely honest with everybody with everything. I mean, that's the point of the channel. So I have my affiliates, ISW, CMEG, TraderSync, Webull, but Webull is whatever. I'm using them to try to help you guys. I still don't understand why more people don't sign up for the Webull thing. It's literally free money, but whatever. I guess people are just confused. But it's literally them trying to earn your business, but they're giving you something in hopes that you'll keep trading with them. But whatever, different story. Everyone's always complaining about the commissions. When you are starting out with a small account, yes, it effing sucks. It absolutely sucks. Commissions eat your shit up. Fees, paying every month to have the platform, it eats your shit up. It eats your profits if you have profits. But people focus so much on commissions. It's so frustrating because I will tell you right now, commissions ruled the first year and like 2-3 months of my trading. I could not stop thinking about how often the commissions were just, there was so much. It just, the commissions, I remember I started with SureTrader. It was $5 a ticket, not $3. Imagine paying $5 a ticket. Imagine the people that were paying on Thinkorswim $7 a ticket. E-Trade was, I think, $8 or $9 a ticket. I remember back before I ever got into this, there was a lot of brokers that were $10 a ticket. So it's a pay-to-play game. The sooner that you can stop worrying about commissions, the easier it will become for you to progress in your actual trading. If you're worried every time you hit that button, it's in the back of your head, that's $3, that's $3, that's $3. Well, then you're never going to get past that mental point. It's a hard one to get past, I agree. But when I went from $5 to $3, I was saying, holy crap, like this is a game changer. And then I slowly started to realize that I can't worry about this, because even at $3, I was still worried about it. And I was focused so much on making sure I could cover commissions and fees that it was affecting my trading. I would start taking profits early just to be like, oh, well, at least I covered my commissions. Well, if that's all you're after, then you're never going to actually be able to progress. The other argument I have for this is if I was sitting here or you were sitting here and you were trading with a $100,000 account and you're progressed in your career as a trader and you're trading $10,000 days, $1,000 days, whatever it is, like say you're trading $1,000 days, you are not sitting here worried about $3 commissions. So if you're not worried about it, then you can't, and that's who you expect to become, you can't worry about that now, because the more you worry about it, the less chances you're going to have to become that trader in the future. And I'm not trying to be harsh, but it's the truth. the more you worry about those commissions, the longer it's going to take you to move forward. So what do? Like I said, I have the affiliates. I get to use that money. I work hard with the YouTube channel. I guess YouTube is actually another affiliate, but I have other income sources to help me pay for my commissions and fees for trading. I umpire on the side. It's a side job. So what I'm saying is, how bad do you want this? Do you want to learn how to trade with skin in the game, which is what you should do? You should always trade with skin in the game. Paper trading, to me, is useless. You're going... Now, granted, if you're a brand new trader, I disagree with what I just said. If you're a brand new trader, you should definitely paper trade. You should figure out how to buy, sell, get used to seeing some charts, stuff like that. But once you're into this and you're actually trying to make this work, you can't paper trade, because you have to get skin in the game. You have to learn the emotions that you're going to experience when you're in a trade. When you're in a trade like, what was it, DXC? I mean, you remember the chart. When you're in a trade like DXC where it just takes off on you, are you going to be a deer in headlights, or are you going to say, this is a great opportunity, right? I used to be a deer in headlights. I used to be like, holy crap, what's this thing doing? I'm scared. But now I'm like, get ahead, keep on going, let's go. This is a great opportunity. The faster it goes up, the more chances I have to make money when it comes back down. And it's going to come back down even harder the faster it goes up even further, right? That's what I'm thinking now. Where before, all I could think about was, what is this? Like, is there some news on this? Is this going to keep going? Was there a buyout? Like that, those are the thoughts that were going through my head before. But guess what? Each trade is a new trade. Each trade is one single trade. Each trade, you have a max loss set for that trade, right? So any given trade, that's the max amount you can lose, is your max loss. You should never let one trade dictate your entire trading career. So if you have that max loss set in place and you make sure you hit the button when it comes time to get out of that trade, instead of being that person that says, oh, it's okay, I'll let it go a little bit further and see if it wants to pull back. And then it's like, well, I've came this far, I might as well just keep going. And there's a guy in ISW right now that was like that, and he got very lucky. I mean, he still lost a lot of money, but he got very lucky that he didn't blow up his full account. But he basically kept doing that. He was like, well, I'll just let it go, and it'll probably come back down. Not everything has to come back down. Granted, these are high probability setups, but it's still like an 85-15, right? 85% this thing's going to come back down. 15% this thing could continue. And guess what? When it continues, yeah, okay, there's still a chance it could come down, but now it's probably like 60-40. And then it consolidates again and goes a little bit higher. Well, now it's probably like 50-50, maybe even less than 50-50. Like, your odds start to get worse and worse, right? And so at that point, you're literally just hoping. That's why you have a plan to not be in the trade at that point, right? That trade is no longer fast. It is no longer doing what you wanted it to do when you first got into the trade. So you shouldn't be in that trade anymore, right? It's one trade. If you're looking to make this a career, you're going to be taking hundreds of thousands of trades. There should not be one trade that makes that big of a difference in your trading career. Well, you shouldn't be hitting it 20 times. And this is the other thing I keep running into. That's why I've been using the word variable, the 20 variable, because when I scaled into that position, I got to 14 in 6 entries. So it was only 6, not 20. So I got to 14 of the 20 variable with just 6 entries. I'm not taking 20 entries. So I only took 6, right? So 1, 1, 2, 2, 4, 4. You add that all together, that's 14 out of 20. So I only had 6 of that 20 left. If I want to put that all in one entry, I could, or I could split it up into like 3, 3, and then it would be 2 more entries. So I could have had either 7 entries or 8 entries. That's I don't understand. Everyone keeps saying 20 entries. That's crazy. But no. So technically it would be 6 times 3, which is only 18, not 60. Gotcha. Yeah, I can see how, and it seems to be something that I'm not coming across clear with because you're not the first person to say that. So I'm sorry. I'm sorry that I wasn't as clear as I thought I was being. But yeah, you're adding, not, you're scaling into a position to get to 20. Like before, 112 would lead you to a 4 variable, but it's only 3 entries, right? 1, 1, 2. 1 plus 1 is 2, 2 plus 2 is 4, but you only had 3 entries to get there. 20 variable, 1, 1, 2, 2, 4, 4, and then 6, that's 7 entries to get to 20. Yeah, my kids are asleep, thankfully. Well, hopefully I cleared that up, and we'll just move on. So, is there any other questions that you have about it? I feel like I added a ton of extra stuff in there. And the one other thing I was going to talk about, I actually included in there, was the 8515 thing. That pretty much what the scanner's designed to do is when it alerts, it's basically telling you that this is a good opportunity, that 30 minutes from the time that it was alerted on the scanner, the price will be back below where it's alerting. So if it alerted here at 71.51, it's saying 30 minutes from that point, it will probably be back down below that area. That's basically what the scanner's telling you. It's saying there's an 85% chance that it's probably going to be back below that area. So once you get to the 20 variable, that's where I actually have another button on my montage that is set for max loss. So you can set that to your max loss, and it'll tell you what price it has to get to in order for you to hit your max loss. Or you can just watch your P&L. But yes, the idea is once you get your full size, your 20 variable, then yes, you should not be adding any more after that, because your strategy was to get to that 20 variable. And if it's still not working, then you were clearly either early or the trade's just not working. And it's time for you to cut that trade and move on, right? It just isn't working. Now, a lot of times you're going to get, say, obviously not a lot of times, it's going to be very rare that you get to your 20 variable. But say you do get to the 20 variable and it starts to pull back, but it only gets like right to your average, right? Well, you're going to end up with a smaller loss, right? Because you're going to realize, okay, it's fighting to get to my average. It's not quite getting it. It looks like it wants to bounce there. I'm just going to take off, 50% of my position, see what the rest does. And then it starts to come back up and you take the rest off. Well, guess what? That's not going to be anywhere near a max loss. If anything, it's going to be a pretty small loss, right? Because you got almost all the way back down to your average. That's going to happen a lot. That's going to happen a lot even before you get to the 20 variable. Like what happened to me on the DPX or DXC trade. It came right down to my average. It bounced and it started to bounce back up, but we took 50% off. So now we have 50% going back up. If it wanted to continue up the high a day, I would have cut it, but it was only 50% of my position. So it would have been nowhere near my max loss. So everyone's always saying, oh, when you scale in, your losers are way bigger than your winners. Well, that's not always true. Your losers are not always going to be big losers. They're just going to be trades that just did not work out how you wanted to, and you ended up having to take them off. And sometimes they're just going to be small losers, and it's not going to be that big of a deal. So that's what a lot of people don't understand. They're scared that this strategy is always either like it's big risk for little reward, but the win rate is really high, which is true. But if you have a set max loss put in there, then you don't ever have to worry about that, right? You're not going to hit that max loss very often as long as you're being patient with your ads. And there's another guy I've been working with a little bit, and that's one of his problems is like he'll start it here, add here, add here, add here, add here, and like he's adding too quickly. He's not being patient. He's not letting the chart play out. And I'm trying to tell him that he needs to stop that. I mean, essentially, yeah. I do not use anything specific. I go every time I enter, I'm looking for that jiggle effect. So or assuming it's the backside, assuming that we found a top. So if it comes up and I got, what was my first entry on this? My first entry was at 72.04. So my first entry was on this candle right here. And then it went up a little bit higher to 72.34, but it started to come back down. I actually hit it again for another one at 71.96. So right here. So I had 2 entries in this. It tried to come down. I had an order out at 57 right there, and it didn't quite get there. And then it popped back up and tried high of day again. And then it started to come back down, and we ended up taking, I think we took it a little earlier than that. Yeah. It tried to bounce off here again on this candle. So when it did that, we actually took it off at 80, and then it ended up working out anyway. So, but the only time we're hitting entries is when we think it's the top. We're not just hitting entries because it's like every 50 cents or every 20 cents or 10 cents, whatever it is. We're not doing that. Every time we hit that button, it has to be with a purpose because we think we found the top. So don't ever just hit the button just to add size to your position. That's a big no-no. Not the entry place, but the entry share size. Gotcha. So yeah, when we're entering the trade, again, let me pull up the montage. So when we pull up a chart, we look at the scale, right? So this is that weird 12 cent, 13 cent thing that DOS has. But look how close the lines are together. So that means it's about to click over to the 25 cent. Let's see if we can, or 20 cent. So there it is. So let's say when we have our 2 days up, like I always do, and we see, so it's 20 cents. So we will come here, we have 25 cent. We just click this. It'll give us our share size, and we're good to go. And that's what we use. So yeah, 11, well, it's 1122 and then 44 is what I did. But and again, this is where the strategy becomes your own, because say you're confident after you got this ad and you got this one, and then it comes up fake out, breakout, and as it's coming back down, you could hit this for whatever you want. You still have 18 of your 20 left, right? You only use 2, a 1 and a 1. So you could hammer, if you really think this is the top, you could hammer this for 10, you could hammer it for 18, you could hammer it for whatever you want. If you think this is the top and you feel really strongly about it and you want to get full size, 1, 1, 18, hit it, right? You can do that. But you also have to realize, okay, well, if this goes high of day, I'm going to have to stop out. And it's actually not going to be a max loss because you got a pretty good entry because you thought that was the top. But you're also limiting yourself that if this does bounce here and goes high of day, that you have to get out of the position. You can no longer play it. Yeah. But if you do 1, 1 here, and then a 2, and then another 2, and then a 4, and then a 4, you can do it however you want. You could do 1, 1, you could do 1, 1, 2, and then 4, and then 8. So that would be 8, 12, and 16. So 1, 1, 2, 4, 8. So 16 in 5 entries. And then you could use the last 4 if you want, or, again, you can split it up however you want. It's basically how you feel the stock is trading. That's really what it comes down to. Hey, all, happy to see you. We've got some good conversation going on. I can't stay, but just wanted to drop in and say hi. Keep up the good. Appreciate it, Goose. Hope all is well, man. Have a good weekend. Hopefully you're already having a good weekend. Hopefully today was good. Hopefully you have something good going on for Labor Day. Mine is to just chill out with the kids. Silly kids. Yes, yeah. The whole goal, right? I always use previous resistance and the top of the move. If you want, you can draw the fibs. The fibs help. Top to bottom with the fibs. So go to the top of the move, go to the bottom, and it'll give you a 50% line. Your goal is to keep your average above that 50% line. But again, it doesn't mean just start adding to your position while it's up in this area just to get you above that 50% line. If you are below the 50% line, just either see if it's the backside, try to feel the backside, or if it's running, you might have to add a little bit more shares than you were before. That's why if you do like a 1, 1, 1, 1, 1, 1, 1, there's a reason that doesn't work. Because after like the 4th ad, your average is just crap. And now you're adding, say these are 10 shares, 10 shares, 10 shares, 10 shares, 10 shares, 10 shares. Well, once you get to 40 shares, that 10 shares you're adding up here, you're only adding 25% of your position. That's not going to have very much influence on the overall price of your average. So, but if you have a 1, and then a 2, so your average is going to be here in the middle of the 1 and the 1, right? And then you hit the 2, well, now it's going to be in the middle of that and your current average. So it's going to be right there, right? So now you brought it up. But if this was a 1, and then another 1, your average is going to go here, and then another 1's probably going to bring it to like here. So look at that. That's a huge difference, right? So that's the idea behind keeping your average up. And that's why using the 1 1 1 1 1 1 system just to me doesn't make any sense. Yes, sir, Goose. Appreciate it. Same to you, man. You guys know you can always ask me questions on Discord too, if you ever have any questions. Yeah, like I said, it's pretty simple. It's a simple idea. The whole idea is to not make things too difficult, because if you make it too difficult, then you're so worried about all the things that make it difficult that you're just never going to trade. So the more simple that you can make something that has a high probability of winning, the better off you are. Any more questions? You got me for another 8 minutes. I'm just kidding. I'm not putting you on a time crunch. If we're having good conversation and it goes past that, I'm not going to just cut it off. I'm not that guy. I'm just going to sit here and add to my list for tomorrow. No, so the scale on the charts, they come up on any time frame. But here, let me pull up what I actually use. So right now, today is the next day, so it's only going to show me the last day because that's currently what I have, right? There's no new day started. But when a new day starts, you'll see there's always a scale here. There's a 50-cent scale here, $5 scale here on Tesla. Over here on the SPY, there's a dollar scale. The goal, why does it keep doing that? The goal is to make sure that these are always the same. So what I do is if I want to zoom in on a chart, I can do it, but I never adjust the back part of the chart. So it's always just 2 days. Now, if you want to do 2 days like I do, you can right click on the chart, data config, and you just set from and to. So the from will be the day before and to will be the current day. And you can do 3 days, you can do 1 day, it doesn't matter. Just make sure it's always the same. So if you want it to be 1 day, just make sure it's always 1 day, because it's going to throw these numbers off if you don't use the same scale every single time. So if I pull up a new chart, SPG, so it's a 50-cent scale right now, but if I was zoomed in, look at that. It could be a 10-cent scale. That's a 5x difference, and that could really get your share size completely screwed up. But if you're always using the same scale, you can never get it wrong. It's always going to be the same risk based off of the same scale on no matter what ticker it is. That make sense? Well, that's fine. A way to get around that, if you're going to try doing it like this, is have it set to a certain amount. If you're zoomed in like this when you pull the charts up, right? Say you have it like this, that's fine. But once you realize you're interested in actually trading it, have the chart set so you can just quickly scroll out like this and you can see the scale. And then you can scroll right back in. That way it's always the same. Because if you're zoomed in like this, the next chart you could be zoomed in like this, and then the next chart you could be zoomed in like this, and the next chart you could be like, you don't, if you're zooming in and out, you don't know exactly what it is. But if you always have a back marker, it'll always be the same. So if you like to zoom in, go ahead, zoom in. That's fine. But if you're interested and you want to start a stock and you want to make you're ready to enter, and you say you have the share size set because of the scale, always have it set the same. So scroll out real quick. I mean, look how quick that is. So like SPG, I like it. Okay, I'm ready. Scroll out. Okay, 50 cents. Boom, 50 cents. Scroll back in. Good to go. Yeah, that would be my recommendation. I feel like that would be the best way to do that if you like it zoomed in. Keep asking. Got anything else? I said I'm just making my list. I'm making butter chicken. I'm getting everything on my list. What really helps? My recipe? Yeah, you should. It'll put two and two together as far as, getting your montage set up. Yeah, and like I said, this stop max button, you can set this to whatever you want. Like I said, this is the old button, so I haven't changed it because I haven't had to in a while. And plus, I just use my P&L. So I made this button with the intentions of using it, but I just haven't really needed to. But at any given time, you can change this number to what you want your max loss to be in dollars. And whenever you're in a position, you can hit that button and it'll tell you. I think I have it set to load. Let me see. Now I have it set to send. So it'll actually send a stop order, which you can change that to just load it so you can just see where it would be in your montage. But right now it's set to send an actual stop order to where it would have to get to with your current average to hit that max stop loss. Yeah, I've always said one of the hardest parts of risk management is figuring out your share size when entering the stock. So that was my goal, was to figure out a way to just stop worrying about that so much. So now it's literally foolproof. Literally, it's pull it up. Okay, the scale says 50 cents, 50 cents. The only time that might change is, see how when I scroll in and see how it's 25 cents, see how skinny these bars are, see how close together they are? That means that it's about to switch to 50 cents. So if the move continues, that means it's about to go to the 50-cent scale, which if I just scroll out one click, you can see it goes to 50 cents. And then look how wide those bars are, right? So if a stock is really moving, and this is a little bit of an advanced technique, but if the stock is really moving and you really like it and you see the bars are really wide like this, you could actually be a little bit more aggressive and use the 25-cent button because you know that this thing probably just changed over. Or if you think you're early and you see it's really squished together like this and you think this thing could really move, well, instead of using the 25-cent button, you could use the 50-cent button. And you'll see me do that every once in a while. Because I actually had somebody come to me and, oh, you said you used the scale, but it said 25 cent, but you used the 50 cent. And then I had to explain to them exactly what I'm explaining to you right now. Because I could tell that it was about to switch over to 50 cents and I felt like that this move might not be done and I wanted to give it some room. right? I didn't want to get too heavy too quick, because if you use the 25-cent button and this thing rips into the 50-cent scale and acts like it should have been here all along, then you're now using the 25-cent button. You're using twice as much share size than you should have, right? So that is one thing to kind of keep in mind. But as long as you use the same thing every single time, in the grand scheme of things, 100,000 trades down the line, that one trade where you happen to go a little too big and that one trade you happen to go a little too small is all going to even itself out. As long as you're doing the same thing every single time, that's what counts. All right, I think I actually have everything. I don't have that. All right, should have everything. Cool, man. You have any more questions? Yeah, what do you got? Do you currently have the scanner? Well, Brian, like I said, just put that in my link. Like if you click the link, so you could see that way. But I'll just tell you, he has it listed at $299 a month, and he actually likes for you to pay 6 months in advance. And yeah, the team is pretty expensive. But what I'll tell you is you don't need the team to start. All you really need is the base elite version, which is I think $97 a month if you use the link down below. It gives you it's like 30% off. I can't tell you the exact number. But what I can do is I can get you in to the team chat, like team ISW. You can basically, as if you were purchasing the team ISW package, I can get you in there for a week. So if you want to see, if you think, now I'm going to tell you up front, don't take this week if you don't think that you could actually want to afford to actually pay to be part of the team, because you're going to be in there for a week and you're going to want to be in there forever. I'm going to tell you right now. It's very I don't want to say addicting, but you will see the value of being in there. It's such a big deal being in there with Brian, the guy who made the scanners, the guy who's been trading, and you're not going to believe him. You're not going to believe that this guy exists. We call him God. We call him the Holy Grail. We call him everything because the dude he's never read. Like, he has read trades, but he's just every day just killing it every day. And you're not going to want to leave that. So I will offer you a free week, but I'm telling you not to take it unless you really think it's a viable option for you down the line. What I am telling you is that you really only need the elite scanners, because that gives you the plus and minus I3 scans, which is really what it's all about. That's really all you need. That's essentially what I'm using, but I use the Ultra Scan, and the main difference is the Ultra Scan only shows the moves that are really moving, but also high of day. It's kind of like the high of day scanner and the I3 scanner kind of put together. So it's always going to show you the moves that are like this. It's not going to show you and give you all the scramble of moves that are coming up off the bottom, because there's moves like this on AMD down here where it forms a bottom and then makes an intense move. Like right here, you can tell, like if we scroll in right here, you can tell that this move right here was a pretty intense move. So this could be on the scanner, but if you pull this chart up, you're not going to be interested in that move, right? So the ultra scan, like, it gets rid of all that. It's a lot less chances of a false signal per se. So hopefully that answered your questions. I kind of went out on a limb. I could have just told you the cost, but I'm not going to mislead you. So it's not who I am. I am not the person looking for quick bucks, right? I'd rather see you succeed. I'm investing my time into you, right? I want you to succeed. So I'm not here to be like, oh, he wants a team scanner, I can get a quick cash grab, blah, blah, blah. Because I get a percentage when people sign up. So I'm not after that, right? I'm here to make my money from trading. It is nice being affiliated, right? That's how I pay for some of my fees and commissions while I'm trying to become consistent with this. So it's so awkward to talk about that sometimes, but it's like, I'm going to be honest about it. So whatever. But yeah, if you want to go down and look at it, it's all down there in that link in the description. Would it be worth it if I can only trade until 7:30 Pacific? That's 10:30. I only trade till 11, so 8 your time. I honestly, a lot of times, I don't really ever trade after 10:30, so 7:30 your time. All the money, all the good trades that I take are before that. So yeah, I mean, that's why my videos are out at lunchtime, because I made a rule for myself: no trades after 11 o'clock, which is 8 o'clock your time. So I'm just gonna say yes to answer your question, because I think that's when all the valuable opportunities come. Anything that moves after that time is usually very news driven, and I don't like news. News means price discovery, and sometimes you can just get caught in some bad trades. Okay. I'll get that for you. I'll get it for you, and you'll have it either tonight or tomorrow. I'll get it so you can get it set up, and we'll go from there. Sound cool, man? Go enjoy them kids the rest of the weekend. This candle smells so good. Yeah, I'll send it to you on Discord. I'll shoot them the message once I get off here, and once I get it, I'll send it to you. It'll be a username and password, and you just have to go onto the site, throw it in there, download it. You have to do a little data access code thing. It's just like a legality thing, and you should be good to go. But all right, man. Well, I'm gonna get out of here. Go enjoy the rest of your weekend. Hopefully this was a good session. It felt like a good session. I actually love repeating it to myself, right? It's always good to have your strategy and just nail it into your head, right? So that way you have less chances of not doing it. But all right, man. I will catch you later. I'm gonna go probably take a shower and get in bed. It's 10:30 here. I'm tired. Later, man.